All right, what's up, guys? I know it's been a while. We're finally back. I've seen a lot of people make a lot of videos, be it about a model or trading strategy, um, or money that they're making in the market or trading prop firms. But I feel like a reality that's not spoken about enough is the reality of trading with a full-time job, right? So much so I felt like it kind of deserved to make its own video. I'm going to give you guys five basic concepts that are very powerful and important for you to keep in mind and actually practice to make sure that you guys are actually finding success when you guys have full-time jobs. Now, the reality is that we all get into trading or fall into trading in whatever asset class for a reason. A lot of people for financial freedom, a lot of others maybe just as a hobby, or just as means to create additional income, right? Whether it be just to pay an extra bill or just to bring in a little bit of extra money. Um, so as far as aspirations and goals, everybody kind of has a different thing that they expect out of trading. But the truth is that a lot of people are in a position in life where they still need to maintain kind of their day to day. So a lot of people are still working. And the truth is, a lot of people don't like to preach with trading because what you see is a lot of flashy wins and money and cars and watches when you look at these successful traders, is that it takes time. And these people that are genuinely making that much money have put in years of work to get there. Um, and a lot of times, a lot of that will come while you're still doing something else full time. So I wanted to talk about that and how you can actually leverage the time that you do have, understanding is limited, and find success in something that is very hard, like trading. So, what exactly are the struggles of trading with a job? So the obvious is the first thing is you have a lack of time. Now it's no surprise that when you're working full time, you don't have the same amount of time that someone that's not working does to analyze the market, to prep, to maybe pay attention to key news. So already you're technically at a disadvantage as far as the amount of time you have to prepare and put yourself in position to actually succeed in trading. So the first thing is a lack of time. Next, you're the psychology is definitely different, right? When you have a lack of time, you are trading in a very specific window, and there's almost kind of like this feeling where you need to force something. Like, I can only trade for an hour today. I need to make it count. I must win. There's no way that I've waited, a whole day, right? And I was tied up all of yesterday, and I have this 1 hour to trade, and I don't make something happen. I need to make some money here. Um, and if you've been trading for long enough, you will understand that when you tell the market what you want, it laughs at you. And usually it laughs at you by way of a red day, or a couple zeros with a minus sign in front of it on your account. So, obviously this is really a setup for chaos as far as your P&L goes. And typically it is very hard to stay very disciplined within a structured amount of time. The truth is, when people are able to trade and they trade full time, they can go into the market, right? Analyze their trades with a very prepared, lengthy plan. And they have more time to kind of let the market play out and ultimately uh, take multiple trades, right? So there's a little bit less pressure on the one or the two or whatever it is for you, trades that you take in a day. And you know that if something doesn't come in the first hour, well, I have the second hour, I have the third hour, I have the fourth hour. So patience comes a little bit easier when you have more time to play with. When you only have that 1 hour, there's a little bit of desperation that starts to kick in. So that's a big thing. Also, it's very tough to analyze and stay tuned into what the market is doing, market sentiment, also, just key factors as far as, key levels, right? News. When you have other distractions, you have other things going on, there's a certain level of focus that's necessary within trading and information that you need to be cognizant of when you're actually on the chart that sometimes kind of slips away, with other things going on. And then with all that said, it's just stressful, right? You know, you're human, right? And one of the biggest things with trading is you need to find a way to execute with a lack of being overly emotional, not being overly excited, happy, mad, sad, um, all of which just becomes condensed into small periods or blocks of time where you're available due to whatever else you have going on. So, in all of that, you have FOMO, right? We talk about FOMO all the time. What what bigger FOMO will you have when you're literally working and doing something, right? And whatever your goal may be, ultimately that's taking away from what you're trying to do with trading, right? Yeah, I'm stepping away from the charts. I'm working. Um, and I check my phone and I see that, NASDAQ is up 1%. Or I see some big news or, big headline where we're getting this volatile price action or we're trending cleanly or my model's playing out and I'm like, oh yeah, I probably would have taken this and I would have taken that and I would have been up this much. Um, and all of that leads to a fear of missing out ultimately. And all of these make trading with a full-time job extremely difficult. And that's why I felt like it was kind of important to talk about. So I'm going to give you guys five key steps for you guys to keep in mind to make sure that you can still have success in midst of all of these challenges that you do have when you're not trading full-time yet, right? The first one is number one, this is crucial. Choose the right time to trade. You need to come to an acceptance of the reality that you are not able to trade the whole session, right? If I'm I trade futures primarily, so I cannot trade the entire New York session. I know, at least when I'm looking at the hours of the job that I work, um, I do not have the level of freedom in my time to trade from 9 to 5. I just can't, right? So it's first just coming to accept that reality and then finding a block of time that you're going to commit to trading on a consistent basis. Now, for me, it's preference, but I would say most people, futures traders, are going to lean towards trading the New York Stock Exchange hours. So that's typically going to be between 9:30 Eastern Standard Time, and 4:30 or 5 p.m. Now, for you, if you don't even have flexibility in your time early, that might be in the afternoon, right? Maybe you can only trade the afternoon session, or maybe you can only trade Asia, which is at night, right? The good thing about futures is that it's open 24 hours. So you have that ability, but obviously you have to adjust to that price action. So the first thing is you need to pick what time you realistically have to trade, right? Be it pre-market, lunch break, power hour, right? Or maybe you just skip New York altogether and you trade the Asia session, which is the overnight, right? And I'm going to touch on that a little bit. The only important thing to realize, and I'm going to get into this in the next points, you need to adjust your trading style according to when you actually trade, right? It does matter. When you trade makes a very, very vast difference in how you need to adjust as far as your model and what sort of conditions you can kind of expect. Obviously, that's going to play into how much risk you put on, um, and what, as far as sizing. So that's going to be really important. So you should really be focused on one session or a key few hours a day. And that's it. I know that's not what you might want to hear. I know that's a hard reality to accept, because we want to just log in and trade whenever. What happens is when you're inconsistent, let's say one day that you're working and you just happen to have between 9 and 10 a.m. and you trade. Though I think there's some people that can kind of just take what they can get, so to say. What I've noticed is more people than not are gonna have a hard time adjusting and bouncing between, let's say for 2 days in a row they're able to trade New York, and then all they have after that is Asia the next 2 days. It's very different price action, right? Um, and the most important thing about finding success when you're trading, you're doing something else full time, is finding a simple model and consistency, of which it's hard to find when you're trading completely different markets and different volatility with different price action. Now I know the market itself each and every day presents very different conditions that you have to adjust to, but you limit that a little bit. You mitigate that a little bit when you at least trade at the same times every day. If I'm switching and just taking what I can get, so to speak, and not really limiting or being strict on I only trade these times whether or not I'm available. That consistency is a little bit harder to control. Um and then just understand fewer trades. You should be taking fewer trades, right? And fewer trades means better quality, right? It's a saying as old as time, quality over quantity. That is more true than ever when you're trying to trade with a full-time job. Is just the truth. You need to accept the reality that you're not going to be able to take the trades, the amount of trades that someone takes when they are able to look at the charts and take setups throughout the session. It's just the truth. And with that, it's just understanding like, well, okay, there might be days where I can only take one, or maybe there's more days that I just can't trade, right? And there's a lot of people that look back at their P&L, or they're looking at their calendar and they're saying, well, there was 3, 4, 5 days this month I couldn't even take a trade. You need to accept that reality. And I think that there's a certain level of patience um, and precision that's kind of needed for you to have success in those conditions. But the reality is, you cannot trade every day. You can't trade all the time. So you need to hone in on a particular time frame and take the best possible trades, A plus within your model, right? There's no excuses for over trading. There's no room for mistakes. And you truly need to be consistent. We're going to touch on a couple of things that you guys can do to make that a little bit easier. I know it's easier said than done. Number two, you should only be trading one asset in one model. Okay. I know, I trade some ICT concepts myself. I know that everyone wants to, be a master trader that knows 100 different models and is constantly watching videos on new strategies and new indicator setups and new trading, entry models. But you do not have the flexibility or the amount of time to consistently be successful with multiple different models when you only have a limited amount of time to trade, right? You should keep it as simple as you possibly can, right? So only focus on one market. So whether it's NQ or ES, whether it's gold, whether it's a particular Forex dollar pair, and hone in on that one pair. Learn its rhythm, learn how it trades, learn how volatile it is, right? Is it typically range bound, or is it an asset that's kind of built to go up, right? And like an NQ, right? When you look at just the stock market in general, it's generally built to go up, right? So there's already kind of a built-in bias there where I can lean in and understand, okay, this is an asset that's a little bit easy to understand. Stocks are meant to go up, right? It's not that simple day in and day out, but um, focus on one thing, right? And that is ultimately where you're going to have the most success because you're truly being efficient with the time that you have. And make sure you keep your strategy tight. You should really only have a max of two repeatable setups, right? Two repeatable models, and these should be as simple as possible, right? They don't need to be complicated. There's a lot of people, plenty of people that make a lot of money in the market trading one very simple model. Don't overcomplicate it. When there's too much to look for, and you overcomplicate how you trade, that ultimately is not going to be a setup for success when you don't have enough time for you to focus or have enough mental capacity to look for what you're looking for with many different models. Again, consistency is what you're looking for when you're looking to be a profitable, successful trader. It's even harder and it's even more necessary when you only have a little bit of time and you have a full-time job. So keep your strategy tight, right? You should only be trading one model. And I say this and I preach this because I see so many people that are, and I know there are people that haven't become profitable yet and they haven't made any money in the markets, but they're constantly trading either new models or they're just looking for a bunch of different things. And a lot of times what ends up happening is you're just leaning into a lot of times people will model hop and kind of claim that they're taking a trade due to a particular model according to whatever bias that they have innately when they're looking at the market, right? So they're almost kind of fitting a model for whatever's you see in the market, when it really should be I have a model, and if the market fits what I'm expecting with my model, I take the trade. But people do it the other way around. And ultimately, that is not consistent. And you're not going to have a profitable edge when you trade in that way. And then number three, this is not that popular, but I'm gonna say this, and I know people get sick of hearing this. Backtest. Backtest. There is no excuse for you to not be backtesting. If anything, I can argue that as someone that doesn't have the time to be on the charts all day long, you should be backtesting more than the people that trade full time, right? You should be backtesting more than people that trade full time, right? Absolutely. There's no excuse not to, because the truth is, why I say that, if I trade full time, I have a lot more chart time than you do, right? If I'm genuinely on the charts looking for setups 7 or 8 hours a day, well, that's 7 or 8 hours of price action that I'm witnessing, trading, watching, right? Um, that you're not, because you're working or you're doing something else. And the reality is, the more chart time you have, the more you understand price action and you understand how your particular asset class moves. You should be back testing. There's no excuse not to be back testing. And when I say back testing, right? Because I see this has become kind of like a loose concept now where people are like, well, I don't back test, I forward test, or, um, you know, they'll just market replay like the previous day's session and just look at it. When I say backtest, you know, the tools you should be using, it can be like a replay mode from TradingView, but what you should be doing is, within whatever your model is, or if you're testing a new model or a new strategy or a particular macro or time frame, replay the candles and take entries, hypothetical entries, and even mark them out. And I'll also mention the backtesting feature with TradeZella that you should be using. Um, it doesn't need to be TradeZella. I just think it's a great tool, uh, where you're able to take hypothetical entries or simulated entries as if you were actively trading in that market, right? So actually walk through the price action from the previous day, and then click entry and commit to an idea that you see according to the price action you have, and then track your results, right? So in a sense, trade previous timeframes, previous markets, without obviously the knowledge of what's about to happen, and then see how you do. You should be doing this for minimum a few hours a week, minimum, right? If you're new, this should truly be all you're doing. But you need to be backtesting. I say that because, even though it's an idea or concept or practice, as old as trading is, I guess, um, I see a lot of newer traders that have kind of done away with the idea of backtesting and believe that the only way to efficiently actually learn the market is trading live and putting on risk. I agree with that to a certain extent, but in order to truly build conviction and actually be efficient in the market, you need to believe in your heart wholeheartedly that you've seen the model that you trade work again and again and again and again. How could I ever truly in my heart, besides just a blind faith, believe that I have the ability, or I have a model that I actually have an edge in this market, that where I can take trades and win more than I lose, if I haven't seen it happen, if I haven't done it time and time again? Yes, I understand it's historical data, right? It's back testing. And I know there's a certain psychological difference or separation between trading in the past and trading current action. I understand that. And I think that separation is what you do only gain trading live. But that doesn't dismiss the need for you to actually backtest. So use the replay mode. Track your results in Excel. You should be screen recording, right? Even your trades, and journaling and talking through your trades just to yourself while you're live trading. Also, just a little shout. TradeZella backtesting feature is amazing. And I think that, that's just a great place to start. There is a subscription fee, but if you're serious about trading and you're serious about, your backtesting, then it's a very small amount. Um, you guys should be investing in that. So, and you should be journaling your trading, right? So take accountability, right? None of this just, trading and not writing it down, or kind of having an actual explanation or a built, you know, a conviction or bias that has some meat behind it, you're doing yourself a disservice if you're just taking BS trades, for a lack of a better way to say it, and then just saying, it's just my mentality, or, I just didn't follow my rules. Well, why didn't you? Why didn't you? Right? How were you feeling? What was going on when you traded? Were you distracted? Right? Did were you did you actually prep the night before? Did you understand the conditions of the market? Right? Um, win or lose, not just for your losses, but also for your wins. A lot of times we take wins and they're trades we probably still shouldn't have taken. Just because they worked out well in the end, you profited, doesn't mean there's something you could have done better. That there wasn't something you could have done better. So you should be journaling, and it is more important uh, when you work full time. Number 4, structure your trading around your job. And we kind of already talked about this, but you should be having some level of preparation as far as marking levels, reviewing, the economic calendar, making sure there's no big economic news coming up, and then checking the price action overnight, right? This is very important. Within your own schedule, around your job, understand the time frames that you have. You need to have a good understanding with the time you do have, the free time you do have, right? We talked about picking a particular session to trade. Now, you should also have times that you commit to prep, right? Maybe you can only prep right before the market, right? Fair play. If that's all you can do, that's all you can do. Maybe you can only prep right after market closes. Well, that's what you should be doing. Maybe you do have time the night before. You should be doing that. Put yourself in a position to come into the market as prepared as possible. So even though you have a limited block of time, I'm locked in. I have my levels marked. I have my economic calendar ready. I have an idea of what we did in the Asia session overnight and how price moved, and then just create a simple trade plan before work. Right, with that, all that information I just mentioned, create a trade plan with a bias, maybe even alerts, price alerts, for you to understand kind of key liquidity being taken, or you know trend or market structure shifts. So you should be doing that. And then also the last thing is, right, and you can kind of work this in through back testing, but the use of stop orders or limit orders or OCO brackets. This is going to be very important. Sometimes you can be trading, and if you're prepared enough, there's a particular setup you're looking for depending on your model. Right, I know this is gonna matter if you're trading live or if you're trading on sim. If you're trading on sim, or prop firm challenge, or even a funded prop firm account that is simulated, I do suggest that you try to use these limit orders when you can within your model. um don't put yourself in a position where if you look away from the screen for a couple minutes, you kind of miss your entry, right? It's pretty much the gist of this. Put yourself in a position within your model, if you're able to use limit orders, stop orders, um, whatever the case may be, and just let price kind of do its thing, and then set that, pre-created uh take profit and stop loss according to your trade. You should do that. Limit how much you need to stare at the screen and kind of execute a market order, because sometimes you can't have your attention 100% of the screen. So it's the most important thing. And the last one, man, manage your risk, right? And I know it's like, I know, manage my risk, I know, risk management 101. I mean, that's the first thing a trader ever learns, when we get tired of hearing it. But you genuinely have no room, you don't have room physically, mentally, emotionally, for YOLOs, or for full ports. Um, only risk what you can lose without emotion. Only risk what you can lose without emotion. Now, if you put yourself in a position where you're risking something, right? You're risking an amount, you're sizing in a way where you're getting upset. That's even harder to deal with when you know you're not going to continue to trade. That is a very, very different level of tilt, that I think a lot of people don't speak about. If I only have an hour to trade, right, and I take a bad trade and I lose, and I know I oversized, so I lost a little bit more than what I probably should have, and then I'm like, man, I only have 10 more minutes of the hour that I can trade, but I just need to get that one back, man. I need to get that one back. It's such a recipe for disaster that I will go as far as saying there is less room for error. There already is, but there's less room for error as far as risk management goes when you're working full time as opposed to someone who's trading full time. So avoid revenge trading, right? Don't revenge trade on your lunch break, or punch back in for a quick 10, 15 just to get it back. Again, stick to the time you're gonna trade and stay consistent, man. So hopefully that was a help to you guys. I just wanted to get out there and talk to you guys a little bit about the reality of trying to trade with a full-time job. I know how hard it is. So I felt like some of these tips can kind of help find a little bit of consistency. If you guys can think of anything else that maybe I didn't mention that you think is also a good idea to keep in mind when someone's trading and they work a full time job, please drop it down in the comment section below. I'd appreciate that. Just drop a comment in general. If you did watch this and you thought any of this was kind of good information or good for you. Um, yeah, and if you haven't already, please subscribe. Appreciate the love. Trying to get to I don't even know what my first milestone should be. We're trying to get a few subscribers here, but we'll keep it pushing here. And keep more videos like this. So if you guys mess with this, make sure you like and subscribe the video.